Hey everybody, it's David Nielsen here with Platinum Idaho Real Estate, and on behalf of our entire team here at Platinum Idaho, just wanted to take a quick moment and do a brief market update for last month, the month of February. I didn't end up doing a market update in last month's newsletter for a couple of reasons, and I think the first was that the market is just so crazy right now that it takes a lot of time and effort and energy to submit offers, find homes, work the listings, etc., especially when there's just such tight inventory. And then the second reason is I just think there's not much has really changed, and the market's incredibly tight. It's very much a seller's market, and I don't think I wanted to be a broken record just saying the same thing over and over again. But what I do want to share with you this month is the current state of the market. I wanted to let you know where things are at. What we're seeing is your trusted real estate professionals who are in this market day in and day out all of the time. I wanted to share with you the challenges and the opportunities that I think we are seeing in the current market. And I'm going to share with you some numbers, so bear with me. We're going to pull out a couple of charts, and I want to walk through the current inventory levels in our market. I want to walk through the median price point. I want to walk through sales discounts. And I also want to talk briefly about interest rates and what we forecast for the coming 12 to 24 months in the Treasure Valley. And I'm going to start first with the median home price in Ada County. So the Ada County monthly median home price for the month of February, you can see in this chart. Remember, we're looking at last month's numbers because we haven't completed March yet. But in February, it was $455,000. Now that's up 32% from the same month last year. So from February 2020 to 21, it went up 32% to $455,000 from $344,000. That is a humongous jump. And for perspective, in January 2011, the median price point in Ada County was just $126,000. Now, if you do the math on that, that is a 360% increase in prices in Ada County over the last 10 years, which is just incredible. So I guess the question is, what's driving all of these prices? And I've said before many times, there's a humongous influx of people into the Treasure Valley for a number of different reasons. And I think COVID and the shutdowns and the politics associated with it, I've been saying that for months. I think that's driving people here in record numbers, not to mention that the Treasure Valley is just a great place to live, and we've always had an influx of people. It's just been especially pronounced this year. And then also there's nothing on the market whatsoever. In fact, last December was a record low inventory for existing homes, so not new construction, but for existing homes. We had only 81 homes on the market for the entire Ada County. And as you see in this chart, we actually ended the month of February with 198 single-family existing homes on the market. So it's starting to open up a little bit, but it doesn't really seem to be swaying the needle very much, at least not yet. So I want you to take a look at this chart though. This chart here represents the average price discount from the list price to the contract price or the sold price. And in 2011, we saw discounts up to 3% off the list price. In fact, last year, there was hardly any discounts in the average sales price. It was more than the list price. And that you saw average discounts as low as -1%, which basically means that for a $500,000 home listed for $500,000, it would actually sell for 1% higher, or $505,000. Well, from January to February of this year, that price discount went to a -2%, which means a 2% increase. So then that $500,000 home would sell for $510,000, which is basically a 2% increase from its sales price. I want to talk too about interest rates for just a second, because a few months ago, interest rates were just well below 3%. You could get a 30-year fixed rate for 3 5/8, maybe 3.5. Some were even paying discount points and getting right close to 3% on a 30-year fix. Rates are now over 3%. They're about 3 1/8, maybe 3 1/4. And so how could those interest rates affect our housing market? Well, if interest rates continue going upwards, the demand for housing is going to fall. The cost of money is going to be higher, and there just may not be as much demand for buyers to get into these ultra low interest rate loans. And consequently, with a decrease in demand, I think there's going to be a decrease in appreciation. But I do want to make it clear that I don't think prices are going down anytime soon. I don't think they're going to fall this year. I don't think they're going to fall next year. I don't know if they ever will fall, honestly. I do believe at some point within the next 12 to 24 months, the appreciation is just going to kind of, it's going to kind of settle down. And I think interest rates can play a big role in that. I think it'll make sellers who are hoping to recap all that equity they've been building up over the last few years, that might make them think, now is the time for us to sell. We better sell quickly. It might make buyers who are watching interest rates say, we better lock in our rates now and find something fast before they go up any further. So what I think it might happen is it just might open up the floodgates a little bit on both ends for a little more movement on the buy and sell side, and a little bit more choice and a little more opportunity in the market. But that being said, as a reminder, I don't think that prices are going to go down anytime soon. I still think inventory is going to be very low. I think that's going to be a challenge in this market. But if you're looking to buy, just stick with it, because I do believe prices are going to continue to increase. And by the way, they increased in Ada County 17% last year, year over year. So that's a huge opportunity for equity and appreciation for anything that you buy. Take, for example, that $500,000 home. For every month that you own that new $500,000 home in our market, that is at least a 1.5% monthly appreciation. That's $7,500 of earned equity in your home every single month that you own it. So don't despair if you're buying in this challenging market. I know it's hard out there. We get it. We're in it all the time. But I think there's tremendous opportunity for appreciation on anything that you purchase now. And there's just not a lot to choose from. And I know it can be super frustrating. It can be hard to compete against cash offers from California. But I'll tell you, it can be done. We talk about this as a team all of the time. We're always honing our skills on how best to present the offers and work with the listing agents so that we have the highest possible chance of getting you into a home and getting your offer accepted. Contingent offers are hard right now, but we're especially adept at navigating those. Sometimes you just have to do it. And if you're a seller, I can promise you, we will help you milk every possible penny out of your house, and you're going to do very, very well on that. We have amazing agents, amazing staff and marketing and tools to help you generate the highest level of exposure on your listing. So anyway, that's a long message. I think it's going to be a super fun year in real estate. I do hope that the market kind of switches and changes to more of a balanced market, but I'm afraid we're probably a year or two out from that. And we can't continue to appreciate at 17% annually. It is going to change at some point. But I think that your equity is safe. I don't see prices falling. I don't see that in the future. But I do see that interest rates might kind of settle down the appreciation, and it might become a little bit more normal. So anyway, I hope this information is helpful. As always, if you have any questions about real estate, or you're curious about the value of your home or any other needs that we can help with, please reach out to any member of our team, and we'd absolutely love to be of service. But in the meantime, I hope you're all enjoying the beautiful weather outside, and we'll catch up with you next month. Take care.